everyone. Welcome back to the Higher Standard Live, where I promise I'm going to be obnoxious for about an hour, maybe longer, who knows. Got an interesting weekend with Venezuela happening, and there were reverberating impacts to the economy. We are going to get into those, and we are going to break down exactly what that has meant for the stock market in the last couple of hours. It actually has traded up. For those of you who caught my previous live over the weekend, we covered what we thought were the probabilities, largely believing this was going to be a non-event for the long term and certainly near term. There didn't seem like there was going to be any political disruption in the country. So we saw oil prices rise, and we saw Venezuela largely have seemingly no real response. I mean, they are democratic. They did have a vice president who was willing to step up and step in, but certainly this wasn't like Libya or Iran or something like that, where you saw all this civil unrest happen. So because of that, we're now in a situation where the markets are open, and first real active trading day of the year seems to be a genuinely positive one. That being said, I have made some modifications to a lot of the things that we do on the show to change at least the functionality and how things work on my end of things. So if you have a good experience here, let me know. I did add some of the overlays to the vertical platform. So if you're watching on the vertical platform, you see this now in the stream. You got Polymarkets, prediction markets, and live real-time stock market quotes down below. The D is for any company that's going to be paying dividends in the not-too-distant future. You also get some of the benefits you didn't get on previous streams of, for example, my ability to draw on screen, which you will see from time to time, and I promise it is all sorts of annoying when you can see it for the first time on this. You also have a chat function, which if you're joining from platforms that do feed in, so think comments on LinkedIn, comments on YouTube, those are vertical platforms. Those creep in here. As you see, you got Saeed in the chat, and everybody's ready to comment there. So, and I can also bring those up in real time as they connect through the Restream Chat IO, which I have on my side. So let's get into it, everyone. We had an interesting day, and because of that, the stock market opened up in a way that I thought was interesting, and I wanted to go into a little bit of crude oil and talk a little bit about kind of some of the things that we're seeing here. So overnight trading is officially open. Prior to the market, I was watching it like a hawk. And Chevron, the ticker symbol CVX, was one of the largest oil companies, and it was up 11%. Well, and the reason was actually pretty obvious when you think about it in retrospect. And I'm going to go here to the screen. So actually, I'll go to the prompter first. And the reason was pretty simple. Chevron was one of the few, if not the only U.S.-based oil companies that had access to Venezuela already. So everybody's assuming they're naturally going to see a benefit in the near term. I don't know if that's going to be true, but what I will tell you is I think that the market is reacting with that near term. I'm going to keep using the word near term, and I'm going to talk about long term. There's a big difference in what we're going to see in the markets and how this all plays out, okay? So let's just be somewhat pragmatic here on expectations for the market. I don't think that this is going to be a huge windfall opportunity for long-term investing unless you're thinking like 5-year horizons. So $35+ billion in market cap was added for Chevron alone on the news of the U.S. taking control of Venezuela. That's a huge lift for their company, obviously. This is a major economic operation, and you think about it in the context of a president coming out saying, we're going to run the country for the not-too-distant future. You think, okay, this is possibly an investment opportunity. So remember, Chevron is the sole major U.S. oil company still operating in Venezuela vis-a-vis their relationship and acquisitions of Venezuelan-based oil companies. But you have to remember, historically speaking, Venezuela nationalized the oil industry in 1976, which took the largest supplier of crude oil and frankly the largest supplier of oil in the world and took that and made it a government-sponsored business, stealing assets from foreign companies that were then in place in 1976, and then including the Gulf Oil Company, which wound up becoming later part of Chevron, which is in part how Chevron is still there today. So unlike ExxonMobil and ConocoPhillips, who refused these new terms, Chevron agreed to this nationalization process, and because of that actually stayed in the country and now are getting a bit of a boom here in the market near term. Again, near term. I don't know if this plays out long term for them as well as it has in the short term as oil continues to rise. Think about this in the context of supply and demand. We've heard this a lot in the housing market and in the not too distant past here. housing markets are interesting because it works very clearly as supply and demand in a meaningful way. But in the oil industry, if we're going to bring a ton more supply on the market, and the theory here is very simple as it relates to all the oil disruption you've heard in the news. You get the U.S. companies in there, they build out infrastructure, which improves the efficiency of the single largest producer of oil in the world. That crude oil comes to the U.S. and around the world in more and more quantities. As more and more quantities hit the market, there's two possible and likely outcomes. Number one is you're going to see crude oil refinement. Now, we in the U.S. are more into sweet oil, the oil that comes from Texas. Oil comes from the Middle East. It takes way less effort. I'm going to show some pictures of this here shortly to kind of give you some visual to go along with it. But so our crude oil refineries, which are largely kind of like towards Louisiana and Texas-ish, are going to see a windfall of business because of this. Number one. Number two, more supply hits the market, more supply gets refined. And as that happens, you're going to see oil prices come down over time, not go up. This is why I'm thinking near term versus long term is a very different impact. People think because Chevron's in the country, it's nationalized, and they're the only major U.S. oil company there, they're going to get this benefit, which is why you saw everybody rush in to the stock price today. So, shareholders will get some money back over time because when this was all nationalized back in 1976, a lot of the U.S. shareholders lost a lot of money as a result of it. So think of this as, I guess, ebb and flow or some type of qualified return on your investment over decades. If you were into Chevron that long and you held, most people who are listening did not. So loaded up on Chevron during the negative oil prices in 2020. Dividends based off yield on cost is a double-digit percentage return. Long story short, if you held on to Chevron and you were with them throughout all this time, you made a whole lot of money on Monday. But that's pretty much the only real outlier winner right now. I do have a list of stocks that I want to talk about that I think will be benefited here. And then I want to get into a little bit more of a visual conversation where I'm going to show you a lot of stuff that goes with this, okay? And everybody in the chat, yo, what's up? Let me know if you got any issues with what you're seeing on the social platforms. I'm not seeing anything on my end which suggests that there are any challenges here. But if you guys have anything that you think might be improved upon, let me know. Sound issues resolved. Yes, Saeed, sound issues are resolved on their end for the intros and everything else. I still can't play audio from the computer while I'm doing this until I get a piece of equipment later today, in which case I will be able to resolve that, and we'll get back to kind of our normal broadcast, which is a little bit more engaging in my mind. So let's get into the stocks that I think will benefit from the Venezuela situation. I think there are really three different types of categories here, okay? And I want to be clear. I think number one is you're going to have producers. Producers, right? People who make, right? People who make this product are going to wind up being a beneficiary here. Think Chevron, think Exxon, okay? And I'm going to provide all of these in the show notes if you want to look into them later on and take a look for yourself. I think those two are going to have some benefit near term. But long term, as oil prices decrease, as more oil floods the markets, I don't know if that's going to be a long-term benefit for them as much. Chevron maybe because they're there. But again, when I say the U.S. is going in and we have to continue to build this infrastructure, that also means we've got to build physical things in that country, get to that country, get the approval, work out whatever political zeitgeist is there, and then actually start to build some things to improve this aging oil infrastructure to get the exports up. So that's a longer term play, and it's not going to happen overnight. So people, I think, that are right now talking about Chevron's price going up is because Chevron's the only person there who possibly could move faster, first to market. So think about it in that context. I think refiners, right? Refineries are going to benefit, and my writing is terrible, so let's just clear that off right now. I think refiners are going to benefit here in a really important way. So think Valero, ConocoPhillips, Marathon Petroleum, and again, I'll provide some stock on my end of things to manage that. Saeed's telling me there's a bit of a lag on the audio. Let me know if you guys hear that. For those of you on Instagram, are you guys seeing that? AMPX is a stock that looks ripe for a pop-off, but also fundamentals are strong. Ryan, tell me more. Let's see here. Ryan. Let's see what we got, Ryan. Let's see. The show is meant to be interactive, so... Oops. Take a look at that. AMPX. There you go. Huh. I'll take a look at it. Let's take a look right now, actually. That's what technology's for, right, kids? Let's bring this over here. Let's bring you to the screen. AMPX. Empress Technologies, 9.32, up 6% today. Not a terrible return for the day. Again, I think some of this is near-term stuff. Like, I think if you look at this stuff and you think to yourself, okay, well, this has not been a huge boon for the market as of right now, at least that I can see. But let's take a look at Chevron. See, Chevron up 5%, so a little bit more meaningful. 5% to them, obviously, because what you're looking at on this particular chart is just bigger dollars in general. So here you go. Yeah, you know, I don't know. I look at Chevron. I look at stuff like this, and I think to myself, you know, we'll see. Again, I think this is a near-term boon. I think the rest of the day is going to settle out. I think you saw a little bit of this morning, a little bit of a drop-off, and then a little bit of a pickup, and then you've seen some growth since then. I think it's going to be kind of the biggest part of the day is going to be somewhat meh for them. I think after hours trading is what led into it. I'm not seeing a whole lot from Chevron. This is probably your play this morning, and then after this, it kind of settles out for a little while because, again, you have to get in there and you have to do this. So, number one, we've got integrated producers, Chevron, Exxon. Number two, refineries, Valero, Phillips, Marathon Petroleum. Number three, I think tankers, but near-term only. I think near-term only, you got Frontline, Scorpio tankers, and Nordic American tankers. I think those are really going to be what pops off near term. So if you want a Chevron-like investment, but near term, I think you look at some of those tanker names that I dropped there. Refiners depend on margins, not just high oil prices. Tankers are the most direct play, but they are volatile and fade fast. So starting the day off this morning, we saw Chevron up 8% at a max. You saw Exxon up 5%, ConocoPhillips up 7%, Halliburton up 10%. Schlumberger up 10%, Valero up 9%, Marathon Petroleum 8%, Occidental up 4%. So it was meaningful, and I think those are some big changes. But let's go to the Kobeissi letter. He posted some interesting stuff that I think is kind of worthwhile to talk about. So let's get into this here. I'm going to go to the social media view, which should be right there. And we're going to take a look at this thread, I think, in detail, because I think it's very insightful for people who haven't really followed the oil and energy space in a long period of time. I spend a lot of time here just because I'm interested in energy. I think energy has been an underperforming sector for a little while. And if you've listened to Said and I on the podcast, we've talked a lot about how energy in particular is likely to be a really growth space for the next couple of years. I think there's a little bit of, call it AI, just in general exhaustion. Everybody's been talking about it for so long. I think in the future, you're going to see a situation where energy plays a big role. And it's not because of this. It's because of what AI will ultimately need from energy production. And as we continue to grow and build our technology infrastructure, all these things need to be powered, right? So it's a pretty easy leap to get from here to energy growth. I think biotech is going to be a good sector in the future, too. There's a lot of people in the longevity space, a lot of peptide technology. DLP-1s are obviously big. So I think longevity is going to continue to be where people put their dollars in addition to energy in the future. I think AI might see a little bit of a drop-off over time. But this is actually really interesting stuff, and I think it's worthwhile for people who are watching this to really understand and know exactly what's going on in Venezuela. The Venezuelan plot thickens. While Venezuela holds 303 billion barrels of oil reserves, about 100 billion more than you see the Saudis have, much of this is heavy crude oil. We'll get some pictures here in a minute, which shows you the difference between heavy crude and sweet crude. And you can visually see why heavy crude is a lot more difficult to refine and takes a bit of a process, which again goes back to I don't know this long term is going to benefit anybody quite the way people think. They're thinking near term, this is a great stock play for Monday. Fine, great. But I think long term, you're going to wind up in a situation where refinery just takes more work. That's more labor intensive. There's more capital expenditure which goes into this. So there's a little bit more of a complex financial infrastructure that's going to go into really seeing profits. But over the distance of, call it 5 years, more oil production, more distribution globally. This winds up bringing oil prices down, not up. Texas and Louisiana also happen to have 6 of the largest heavy crude oil refineries in the world. What does this mean? Let us explain. A thread, and this is a great thread. Again, this will be in the show notes, Kobeissi letter. In the early 2000s, Venezuela was a much larger oil producer than the U.S. In fact, Venezuela produced 3 times as much oil at nearly 3.3 million barrels per day. Now, this is a great place to pause and say, okay, wait a minute. This is kind of a weird date. Okay, in 2000, in 2000, they were the larger oil producer than the U.S. The U.S. produced about 46 billion ish. I have to go back, 46 million ish. I want to say, so certainly, a lot more than the U.S. did. But what's interesting is they were nationalized as an oil industry in 1976. So you can clearly see they were still producing great amounts of oil almost 25 years later until 2000, and then. That's pretty wild. So in fact, Venezuela produced 3 times as much oil at nearly 3.3 million barrels per day. So clearly their infrastructure was great, and then it fell off, which does in part play to what you're hearing about the regime and some of the political stuff that you're hearing about not actually being kind of bad news or disinformation, if you will. Clearly the country has been mismanaged in the oil supply, which has been nationalized, and is there probably the single largest place to generate revenue from legally, and I'm ignoring the entire drug trade. By 2020, Venezuela's production had declined to just about 900K a day, while the U.S. hit 5 million barrels a day. That is the chart here that we're looking at. Let's see if I can bring it up here on a bigger look. There we go. That's it there. Crude oil production Venezuela versus Texas at January 2000 to August 2019. So clearly you can see the drop-off in the country's oil supply happening right there, while the U.S. has continued to improve. Now, the interesting thing is the U.S. does not have as much oil as Venezuela does. So this drop-off means that they are really neglecting material resources, and leads anybody who is not familiar with it to believe that their infrastructure is aging if they cannot continue to produce oil and increase their efficiency the way the U.S. has. This is behind the logic of, we're going to go in, the U.S. company's going to go in, we're going to run the country, and this and that. And that's where that rhetoric is really coming from. Not saying I agree with it or saying that it's the right thing, but just saying that's the thing that we're going to talk about here. First, Venezuela has been heavily sanctioned by the U.S. for years. Sanctions means their exports are going to be limited because countries are not allowed to do business with them. This resulted in old oil infrastructure, hindering the ability to extract heavy crude oil. Heavy oil is far more expensive to extract than light crude. This requires advanced techniques like steam injection. And ignore the advanced techniques part of that and focus on what we're going to look at right here. This is the map of Venezuela. And this goes to, and I'm not sure how big I can get that. I don't think I can get it much bigger. So you get Caracas, you get Venezuela, you get their oil belt here, which is the majority where the oil comes from. There is some here by the coast. But again, you can see that there is a healthy amount, when you consider the size and overall structure of Venezuela, there is a healthy amount of oil refinery in and around the country. If you were to look at the same chart for the U.S., it's very limited. Midwest, for example, not a whole lot on the coast, and it's a very different picture. So I don't know that most people really appreciate the magnitude of how much this could change the market landscape, but we're going to see it play out in real time. But more importantly, here's the picture I promised. The image below helps to better understand. The leftmost vial shows heavy crude oil, which is often a goo-like mixture. That's this one right there. And the one on the right, the crude oil becomes lighter and lighter and much easier to process. So you get sweeter crude. Think this one here. I don't know why the one on the end there is. This is actually supposed to be a lot more viscous and a lot less dense, if you will. But that being said, you can see the difference aesthetically here of what the oil looks like and why it is so much different when you talk about refining this. So let's get this into a little bit bigger perspective here. There you go. So you're going to hear some terms in the next couple of days and weeks about oil and about what the product is. This is your Argentinian oil. I'm sorry, Venezuelan oil. My bad. It's really heavy. It takes a lot of refinement to get it to look more like this. And when you think about gas stations in the United States, if you ever pump gas, then you've seen something that looks more along the lines of these three. Because if you're taking something that's closer to production ready and you're working on that, it takes a lot less work and energy to get that end result, which means it's more efficient to produce. So there is going to be, and this is why I say that this heavier crude oil is going to be what's going to be refined in those large plants in Texas, in Louisiana. And this is exactly why you're going to see the long-term benefit to refineries, and why I don't think there is long-term benefit to oil companies. Chevron might get something because of the first one there, first to act, always a benefit to that. But I don't know that you're going to see quite the same benefit because oil prices, as you start to produce, let's just say you get them at double where Texas is at right now, and close to 3 million barrels versus Texas's, 5 million. You're going to dramatically change the landscape for oil production by a player that is physically easier to get to than the Middle East, where you go to the Strait of Hormuz and you've got to deal with the cultural issues, I will say, in and around that region. There's certainly some in South America, but this is probably an easier grab to get to the U.S. for most people. And because of the proximity to Texas and Louisiana, that's looks, well, at least aesthetically to me, and I'm not a shipping expert, looks like a much easier route. So I think this is a real game changer for the oil industry over time. Does that mean that we're going to pay less at the pump? Not near term. You got to get in there. You got to build better refineries. You got to export that to our refineries. Those refineries got to be able to handle the extra production. That production has to get put out to the market. So I don't think you're talking like next week or next year, frankly. I think you're talking years out, which is, again, where I think the refineries benefit, and the people who sell petroleum to the general public are not going to quite see that same boon and windfall as prices drop. The U.S. has become incredibly dependent on heavy crude oil. In 1980, just 10 to 20% of U.S. crude oil's imports were heavy crude oil. Today, the majority of U.S. crude oil imports are heavy crude oil at about 70%. So there you go. We have shifted from that sweet oil product to importing. Majority of the product that we import is crude oil, which means that we are properly positioned to refine this product. But can we refine it in the quantities that are going to be needed here? The U.S. wants more heavy crude, and Venezuela has billions, with a B, barrels of it available. This chart here, which I'm going to blow up for you, U.S. ever more dependent on heavy crude oil. There you go. Light, medium, and heavy. And it goes to show you on this side of the column there. And let's see if I can get rid of this stupid thing there. I don't think I can. There we go. There we go. All right. You go to see this. This is a clear growth pattern. And the text, I haven't figured out this whole text to talk thing yet. It's a clear growth pattern of heavy crude oil, while light has dwindled down. Keep in mind, light is what we have domestically anyway. You would think that we would have a better aging infrastructure of that, but that's just how demand is. The U.S. just needs so much of this product that we're getting it in the hardest to refine product, because that's what's out there. That's what's physically out there. And we're the best positioned, in my mind, to use this product, which probably was part of the logic, at least, into us going into that country and facilitating this request. I'm sure there were other political reasons, but this can't hurt the opinion. If you happen to be in the White House making those decisions, you know that it's likely to have a benefit to your enterprise and the campaign. So now let's take a look at crude oil imports to the U.S. Again, courtesy of the Kobeissi letter here, Canada's share of imports has surged from 15 to 60% of U.S. imports. Meanwhile, Venezuela's imports to the U.S. have effectively stalled. So now you got a regime that was inflammatory. You've got major drug and illicit activity happening in the country. And then you've got their largest export nationalized in the form of crude oil, largely being stalled in their exports to the U.S., which happens to be the one product we depend on more than any other products to get our oil needs met here in the U.S. And we know the U.S. has an energy issue. We know that. So this should not come as a surprise to anybody that if the U.S. can restore these imports, it would be highly profitable for the U.S. government, which, again, is kind of that unwritten thing that nobody's talking about directly, but you're seeing all over the social media. Now, I'm not going to accuse anyone of anything. I'm just going to say you'd be lying to yourself if you didn't think that this was materially, financially going to benefit this country. And you didn't see civil unrest in Venezuela, which is interesting to note. I think that if you would have seen civil unrest, you would have seen the U.S. go in there, there would have been a lot more, I guess, fodder on television to show people, look at all this stuff that's happening in the streets, look at the fights and the protests. But there wasn't, at least not that we saw, any of that made national television. Matter of fact, most of the national television headlines that we saw was showing the ousted president and his wife being taken into custody in New York in that travel route vis-a-vis helicopters and driving to New York, where they were brought in this morning, and he claimed, I think, not guilty. But so, yeah, I don't think that there's been a civil unrest. So what is the news going to focus on? The news is going to focus on this. How can we benefit as an economy on this? And the stock market reacted in a positive way, where the market is largely up today. So you got the S&P, the NASDAQ, all these things up. At least last I checked. We will check again before the show is over because it is a real-time show. But I don't think there's a material change here. Let's pause and check the comments. Ryan, not sure direct correlation to the situation at hand, but strong and really good battery company. Battery might have some benefit, especially as battery technology improves. I think you're going to see some. We got to get to a point where we improve batteries from lithium ion, which has been our staple technology for quite some time. I think that's energy adjacent per se, but certainly part of what will be a problem with AI as AI rolls out and you have much heavier compute. I think you're going to wind up in a situation that's going to require much better batteries, and the company that figures that out is likely to be, frankly, the one that wins that war, if you will. So let's see what else comments I got here. I'm going to go into YouTube, which I have not been watching in because I'm a terrible human being, into the live production studio and see what I got here. And I'm supposed to be getting, so anecdotally here, I'm supposed to be getting restream stuff into the chat that I'm looking at, but it's not coming in. So for what it's worth, I'm flying a little bit blind in the comments section, and I will figure that out at some point in time in the future. All right, so let's turn back to the Kobeissi letter here. There's more to get through, and then I want to cover what you should expect in the markets and what I think are going to be some interesting reports coming out this week. We know that there was a government shutdown, and because of that, most of the reports were stalled. I think we're going to get some really interesting data this week that I think is worthwhile to share. So let's go down here. Currently, Venezuela holds more oil reserves than any other country in the world. That is hard to ignore. And let's take a look at it. There you go. Venezuela, Saudi Arabia, Iran, Canada, Iraq, United Arab Emirates, all of them have less than Venezuela. That to me was actually shocking. I don't know how many of you watching this knew that. I did not. I did not going into this think that was the case. And maybe I was a bit ignorant to it. I don't know. But certainly it was something that was unexpected to me. And when I started spending a little bit of time researching it and figuring out how much oil was actually locked up there that had been nationalized, a lot of the rhetoric on this being a predatory and self-serving U.S. benefit became a lot more logical at that point in time. I get it now. I would have never guessed. I mean, when you grow up in school, you think Middle East, Saudi Arabia, Iran, Canada, maybe, Iraq, certainly, United Arab Emirates, Kuwait, Russia, in the U.S., Libya, Nigeria. I mean, a lot of these places, Kazakhstan, China, Qatar, Brazil, a lot of those made sense to me. For some reason, I never thought about Venezuela. And maybe I'm alone there. But, weirder things happen, and I get it. So let's take a look again at the rest of the charts here before we get into tomorrow. Yesterday, President Trump expected and explicitly said, we are going to have our very large U.S. oil companies go in, spend billions of dollars to fix the broken oil infrastructure, which we covered earlier, and start making money. That does not happen overnight. That does not happen quickly. So I think the reason why you saw Chevron outperform the rest of the market is because Chevron's the only one of these companies that's physically already there. Okay, simple logic. Trump also said the U.S. will sell large amounts of oil pumped from Venezuela. We're going to have our very large oil company go in there, spend billions of dollars, fix the broken oil infrastructure, and start making money and sell large amounts of oil pumped from Venezuela. I mean, you can't really mince words there. That is what it is. I mean, he's saying exactly what the market expects. Now, the market doesn't expect it to happen overnight, which is why you didn't see the market turn very, very, very positive today. It just kind of incrementally grew a little bit, which I think was in line. It becomes even more strategic for the U.S. Aside from Venezuela, Russia has some of the largest heavy crude oil reserves in the world. Tapping into Venezuela's heavy crude oil reserves effectively further weakens Russia's influence. This is also a geopolitical move. That was not something that I had thought of. I'm not into politics, and that doesn't really kind of weigh on my mind a lot. But when you break it down like that, it does make a whole lot of sense. If we are not going to be friendly with them for exports and we import so much, 70% of our product is imported crude oil, then that makes a whole hell of a lot of sense, right? We're gonna start depending on countries, and now the countries that we in part somewhat control. And now you've also got a socialist kind of hardliner in the vice president that's there, who was just elected, and Trump took a veiled kind of shot across the bow at her. So I don't know how long the U.S. planned to be there. I don't think anybody knows that right now, but certainly I think you've got an environment where things are dynamically changing. And for right now, U.S. oil companies are going to go in and they are going to improve their infrastructure, which is going to result in more oil coming out down the pipe. That just is what it is. Top it all off, China is the largest buyer of Venezuelan oil. That was news to me too. This accounts for about 5% of China's total annual imports. And the U.S., as the U.S. gains control of Venezuela, this gives President Trump even more control over China. So now he's less dependent on Russia and has more control over China because we have said we're going to go in there and we're going to control the oil infrastructure. If we control the country and oil is nationalized and we're bringing our people in, that means the U.S. is now controlling their distribution channels in part and certainly maybe in total as well. That is wild when you think about it. Think about the implications to everybody. So I think that this is not something that's been covered on television, quite frankly. And I think we're in a situation where you see a lot of this playing out, and you see a lot of people on social media, and I tend to sit a little low on this angle, so I apologize. You tend to see a lot of people on social media stigmatizing elements of this, and the elements that you see stigmatized are generally the political spin that's really in your face, right? Oh, we're ejecting the president over there because we have nefarious intent, which may or may not be true. I'm again, not a political commentary. I'm not a political expert. But what I will tell you is there are stuff like this that are tertiary benefits that I certainly didn't see. And I didn't hear anybody on the news report about this. So now you got us less dependent on China. And I'm sorry, less dependent on Russia for their exports to us. When there has been somewhat an interesting relationship dynamic there. It's still sad what's going on in Ukraine and everything that's happening, but we're certainly still communicating with them. We've been having a bit of tensions with China as well, although I would say very different tensions because of their geopolitical power prowess. And now we control a huge portion of what their imports are. About 5% of their total imports are coming from Venezuela, which in theory, U.S. companies are now going to make money off of because this nationalized product is going to have U.S. countries going in there to help improve the infrastructure. And this is not a near-term thing. This is going to be years in the making. So we're going to have a lot of CapEx go out there to build this infrastructure, to improve it. A lot of shipping people go out there. And maybe there's some benefit to shipping because you see the amount of product leaving the country. It will improve some of these shippers. So maybe that's your play long-term is you go into shippers and you go into the crude oil refineries and you stay away from the people selling it because you know that's going to go down in value and their sales, unless they really increase internationally, aren't going to be hugely driven up in the U.S. because you're going to offset whatever growth in sales you see with a lower price. And that's I think, pretty logical for most people. So I don't know that that the Chevron play is anything besides a near-term play. Okay? Let's get back to the desk here. How are we holding up? Everybody okay? I think we're about 35 minutes in about this point in time. I will admit, I went to the gym this morning, hence the hat and the outfit. And I'm going to try to be consistent with that. And ironically, the days that we do this show on Monday, Wednesdays, and Fridays, where I do it for, will be different lengths of time, I think, in the beginning, until we get a more structured format. I will probably be in gym attire. So I apologize in advance if you wanted to see, the suit and tie. That's not likely to happen anytime soon. What you are going to get is this. In gym attire, and hopefully a skinnier version of this, because your boy's been gaining weight since he's been out of the office, if you will. Let's jump back in and finish up the Kobeissi letter stuff. There's only a little bit more I want to cover. Two more real key posts. Again, this is a great post by the Kobeissi letter, and I will put that in the show notes. So let's go back here to the social view. Boom. There you go. Do your suits still fit, Shannon? No, they don't. Matter of fact, I don't have them. I don't have most of them. I've got a couple, which are like the obligatory blue, black, but all the custom suits that I had, yeah. Moment of silence for the suits kid. Yeah. No, I got a lot of ties. There you go. There's a win. My neck didn't get that much fatter, so I'm good there. All right. So this weekend's events in Venezuela will have major effects on the global economy. The macro economy is shifting, and stocks, commodities, bonds, and crypto will move. What want to receive our premium analysis, and that's a Kobeissi letter there. So, and I think the last point here is actually worthwhile. Lastly, Venezuela's economic impact goes well beyond oil. They hold 200 trillion cubic feet of natural gas reserve, and many are unexplored. So there you go. Natural gas Energy, like I said, big, huge upside and not talked about enough. I will also say they have a ton of Bitcoin cryptocurrency. So today, crypto up. Everything's up. Dollars, I think, a little flat. S&P up. I think the QQQ is up. You got NASDAQ up. So I think you got a lot of benefit here long-term internationally. But I don't think the market's reacted in any way, shape, or form in a bad way. So let's go back to the screen view here. Let's go to one of my favorite resources. And I should point out, we are officially sponsored by Fridays. You can go to joinfridays.com. Matter of fact, let's do that now. Okay. We do not have a code yet, but certainly we love the boys over there. And we love their team a great deal. You know that if you watch the show at any point in time, I myself am on microdosing tirzepatide, which they also do. This is their page. Again, go to joinfridays.com. They also do testosterone, longevity products, GLP-1 microdosing, which I do. I think I do about 10 units. It's hard to, I don't want to compare units. It's not the best way to do it because there's different concentrations of the product. But basically, I take about a little less than half a normal dose. Keeps me mentally sharp, keeps me going. I do some longevity stuff that you can look into here. But joinfridays.com, they're supporting the show now, which is also why you see that bad boy down there. You also see it on the live stream, but just below the no nonsense commentary. They are big believers in the show, and their brand colors match ours. So, there you go. Finance.com. Link will be in, of course, the show notes. So stocks rally as tech revives, oil majors get Venezuelan lift. I think this is what you're going to see. Not in my mind, not a lot that's going on to show the market that there's any type of weakness here. U.S. stocks rose Monday as gains for oil stocks after U.S. military strike and capture President Maduro in Venezuela lifted the major indices, while a revival of optimism for AI demand buoyed tech names. I don't know that you're going to see that revival of optimism long term. My 2 cents, there's AI fatigue going on here. People are tired of hearing about it. And I think you're going to see some sectors really improve in the coming months. I think the financial sector is one of them. Margins are going to improve, particularly as the Fed cut the cost to borrow down and Fed funds has decreased. We're probably going to get another cut this year. How many more cuts beyond that? No one really knows for sure. But certainly one more cut will just increase the profitability of banks. So because of that, I think you get the banks in the financial sector, not really regional community banks. I think there's a couple plays in the financial sector which you should think about. The big banks, JP Morgan, Bank of America, I think you're going to see those. The GSIBs, right? The globally systematic important banks you're going to see performance in. The community regional banks are a lot more narrative and niche driven. So I don't think you're going to see a huge amount of benefit there near term. Where you're going to see them benefit is M&A activity. M&A activity is going to peak up. As profits begin to rise and people recover from that contagion period, you're going to wind up in a situation where M&A gets very, very interesting to a lot of these aging CEOs and executives from publicly traded community regional banks. That is going to happen. A question in the comments here from Corey Shattuck. Does Fridays offer BPC 157 orally, and how effective do you think it is? You know what? Let's talk about that, Corey, because your boy has done BPC 157. Let's go back to the desk view here. And I don't know that I can copy this. Let me see here. Yeah, I can't. So let's go here and all right. There we go. All right, so BPC 157 is a great product. I have taken the injectable version of this for hair and not for hair, for healing. I've also taken TB 500. I think BPC 157 is probably one of the best things you can take for recovery. And again, I've only taken the injectable version of it. I don't know that they sell this, but I will find out and I will get back to you. And I'll put some comments in the show notes for this live. What happens when the lives are done is I typically have to go back in and rework the show notes on YouTube for a little bit. So that's where you'll find it. And then I'll kind of clear it up a little bit and let you know. But BPC 157 is a peptide that I like a lot. Great for healing. I've taken the injectable version, like I've said, but I've also taken it with and without TB 500. I think it works, in my mind, just as well without TB 500 personally. I don't know what the whole hype is of that stack per se. I'm sure they work in very different ways. I think BPC 157 has helped me in an interesting way. So I've had tennis elbow. And I did not take BPC 157 for that. I did, what's it called? The blood platelets where they spin it around and you get it back in. I can't remember what the hell it's called at the moment in time, but I had that put back in. Damn it. Someone help me out in the comments. What the hell is that called? Blood plasma, whatever it is. I had that injected back in. PRP. There we go. See? Not totally useless. So I had PRP done in my elbow, and then my other one started to hurt. And I took BPC 157 at that point in time. And without the pain and all the blood, rigmarole, and frankly, the $1,200, or no, it was like $2,000 for the PRP. But without all that pain, all that drama, BPC actually had that go away. It's never come back since. I think it's great. If you got an injury, you should take that. I will find the oral stuff. I don't know how effective oral would be versus the injectable, though. Everything I've taken injectable-wise has been generally better in that format. At least that's what I think anyway. So let's go back to the screen here. This is your S&P 500 look, 6905, almost at 7,000. Record highs, again, coming on the way. For those of you who thought that was going to happen today, I don't think this is enough to move the needle. I think there's a lot of people who thought that the oil trade was going to be a huge boom, but I don't see that. I think you look at the rest of the markets right now. Gold jumped, the dollar gained a little bit as traders weigh the additional geopolitical risks. And again, whenever I think of geopolitical risks, I think of the VIX, right? So let's see the VIX here. The VIX CBOE volatility index, I think it's below 15. Yeah, there you go, 1482. So the fear gauge is well below what I would call something to be noteworthy of at this particular time. And if you go to the chart here and take a look at it, you've seen it creep up a little bit, but this is a bit of, see, this is the problem with chart work, is you'll see this from time to time, and it happens all the time. People will show the spike up, and they go, oh my God, it's spiking up. And if you look at this, you can probably think that. But look at the range here. And for those of you who can't see, I'm going to say it to you. You went from about, call it 14.7 to 14.85. That's what that gap is. Matter of fact, the top of this chart is 1530. And the bottom of this chart, this bottom line, is 1451. So these are not meaningful moves. As a matter of fact, in order to get a meaningful move on a chart with these axes, if you will, you'd have to see something like this. So there is not a lot of fear in the markets right now in response to what we've seen. The geopolitical risk, as far as the fear gauge is telling us, is contained, and the markets are not freaking out about it, which is also why you're seeing the markets bump up the way we have seen them go today. So let's go in here a little bit more. All right, so now we've got a couple things here. U.S. refineries set to benefit from Venezuelan heavy sour oil. We've covered what that is at the top of the show. Gulf-based Valero Energy led the way up, gaining more than 10%. Marathon Petroleum, the largest refiner in the U.S. by volume, and fellow refining major Phillips picked up around 7% each. Again, these are not huge moves in my mind, certainly not relative to what we thought. But here you go, Valero 17% up on the day. Now that is a big ass move. Okay, so I think that goes to tell you Valero and looks like Chevron are probably the biggest winners. Why Maduro's ouster will have limited impact on gas prices as they sink to near 5-year low, and we covered that as well. And the reason why is you're going to put no change to the market near term. They have to build the infrastructure out. They have to, facilitate the logistics of shipping the product here, refining the product, and then getting it out. But more product in the market just means lower oil prices. So whatever incremental benefit they may get from this, you're going to see offset by selling at lower prices. So there you go. Bitcoin rises above 93,000 in sign of bullish trend to start 2026. For me, I think that's actually probably the headline surprise here. Bitcoin has entered the bullish trend. Crypto data from 10x Research wrote a note on Sunday. And if you follow the show for any length of time, you know that one of the things we've often talked about is perhaps a 60-40 split is dead. 60% being equities, 40% being bonds, and that the bond market hasn't exactly been reacting traditionally, and stocks, frankly, are being well outperformed by the leaders. The S&P 500, definitely the Mag 7 and the top 10 are outperforming the rest. The 490, 493, depending on how you look at it, stocks in that. So we've often said that now that the QQQ with a combination of holding Bitcoin cryptocurrency might be the way to go. And asterisk here, we are not fans of holding cryptocurrency vis-a-vis index funds. If you're going to hold cryptocurrency, do it direct and just buy it in a crypto wallet. You have to be smart and get smart on crypto and crypto wallets. But this is actually proven to be a long-term hold. And there might be something that ultimately disrupts this, but near term, you can't deny the returns you're seeing on the QQQ in this. You're seeing that people outperform, which largely falls in line with one consistent thought process. And I'll reiterate it for those of you who are watching the show again. If you believe in technology moving at a faster cadence, okay, then you have to believe that the outlying indices and industries that benefit from technology are going to have an outsized growth relative to the rest of the market. Sure, you might get some energy benefit, but that's also relative to technology. You might get some biotech benefit, but that's also relative to technology. So AI growing is leading the way for what will likely be a breakout sector in tech. And while there is AI fatigue in the markets and people are tired of the headlines, they do want to see the ultimate benefit from technology improve these companies. Now, there are some long-term problems with that. Problem number one, you're going to see a decoupling of jobs and price inflation in the markets. You're going to see GDP act weird, and I'm going to explain this, okay? If we improve the earnings of the companies, which we have seen vis-a-vis the use of AI and technology, you are going to see companies not need as many FTE, full-time employees. They're going to increase their efficiency by having less payroll and less need for humans to do the work. That sounds terrible, and you have to divorce yourself from your human emotions here. It's not good for people, but it is good for companies and earnings. We've seen earnings in all these companies grow. As a matter of fact, all these AI companies are differentiating themselves from companies during the dot-com bubble burst because there are earnings to back them. It is not as speculative a technology, and there is money there. But the money is going to CapEx and building out the infrastructure they need to continue to grow, which means that dividends are down. They're down a whole lot in the market relative to where they were historically. And for those of you following down here on the ticker, the D shows you companies that are paying dividends. I think there's about 9 of them of the 62 that we actively watch. Anecdotally, if you want us to watch some companies, if there's anybody you think that you want to see on the ticker here, by all means, let us know in the comments and we'll circle back and take a look at that. So I do think that AI is going to change the landscape, and you have to believe in technology. And if you believe in technology and you believe that this is happening, that it's real, and there's enough material facts here to prove that it is a real thing happening, okay? And you can say it's an AI bubble. Sure, it is a bubble. Yeah, it's a bubble. But in order for a bubble to be a problem, it has to burst. Otherwise, there's no triggering event which can cause values to go down other than people just not being happy with it. If people are not happy with the product, yeah, values will perform less better or less well. They might go down a little bit. But again, earnings are here. One of the things that Warren Buffett was always critical to point out was that you can play less games with a balance sheet than you can with an income statement. Income statements, you got tax changes, you've got FASB, you've got all sorts of things there that can allow you to present income a little differently based on how you use your money and your tax implications. Balance sheets are very different. So Warren Buffett used to always look at assets as a key backstop. Asset-rich companies produce better over time. There's something physical, tangible there. It's part of the reason why people like real estate and also hate Bitcoin. Anecdotally, Warren Buffett and his former partner, Charlie Munger, may he rest in peace, were not Bitcoin fans. But back to the point here, if you believe in technology, whether or not you believe that cryptocurrency is based on nothing, crypto pundits would say, so is the US dollar. It used to be based off the gold standard, which we went off of in the 70s, early 70s. I want to say 1971. But if that's true, the real backstop, the benefit which props up the value of Bitcoin is not that it's backed by something physical. It's not that there's a bunch of guys wearing yellow hats and looking like idiots on live streams who believe in it. It's because it is the easiest way to send money vis-a-vis technology to support technology. Look at the bar down below. This Poly Markets bar is a Poly Markets bet on probabilities that I use to show you the probability of things like this. Will there be another U.S. government shutdown by January 31st? And the corresponding probability. Will China invade Taiwan? And its corresponding probability. Okay? But people are betting in real time with cryptocurrencies. As a matter of fact, you probably heard recently that there was a huge bet placed on us, the U.S., going in to get Maduro out, and somebody won $400,000. And the argument was insider trading. Well, the Polymarket CEO came out and said, well, you know what? Insider trading is still indicative of what probabilities are. And if somebody insider trades, well, maybe it's a good thing. I'm not co-signing that. I don't think the insider trading is ever a good thing, but with a decentralized blockchain and decentralized currency like crypto, there is no meaningful way to stop that other than the honor code. unless you can track those crypto wallets. And maybe we'll get there at some point in time. But you have to believe that if technology is improving and things like prediction markets, and Robinhood's rolling one of these things, that, shout out to Vlad and those guys. If they all roll out their prediction markets, this is not a train you can get off of while it's going 100 miles an hour down the track, okay? So Bitcoin will have value and utility in a way the U.S. currency likely won't be able to keep up with anytime soon, which is why you've seen some of the mass adoption by some of the large companies, and you've seen some of these funds be developed, is because you can't stop this train now. And sure, you could argue that the U.S. dollar is effectively a digital currency in and of itself, and that it's got all these benefits, but what it doesn't have right now is the blockchain, and I think that is the most undervalued resource here. And all of this goes back to one centralized concept. If you believe that the QQQ, the top 100 companies in the NASDAQ, will outperform like they did last year, if you believe that the top 7 to 10 companies in the S&P 500 will outperform, do you want the average return of 493 mediocre companies and 7 to 10 stellar companies? Or do you want the return of those stellar companies and then something like Bitcoin, which not as a hedge against inflation, but as an outperformer historically over the last several years? That's the question. And I don't know that I have an answer. I just think that it's something that's very meaningful to think about over time. Bitcoin, again, $94,000. Shout out for Saeed's ego. I'm sure wherever he is, wherever he's watching, Bitcoin being at 94. Here we go. Here you go, Saeed. This one's for you, brother. Boom. That is the price of BTC Bitcoin right now. And I do think we'll get it over 100,000 here not too long from now. Full disclosure, I do not hold any cryptocurrency currently. I had traditionally been a 60-40 split kind of guy, so I'm not on this train, but I absolutely see the logic. I did hold Bitcoin and Ethereum for a long time, but I sold out way too soon. I don't have Saeed's wet paper towel hands, but my hands are not diamond hands. If you want to, do people still say that, by the way? I don't know that they do. Okay, let's get into some things that we're going to see in the markets in the next couple of days. Some reports to watch. They will give you an indication of what is likely to be the reality in the markets. ISM manufacturing PMI today. ADP non-farm payrolls Wednesday. ISM services on Wednesday. JOLTS job openings on Wednesday. Which is the one, I think payrolls and jobs are going to be a little bit weird for a while, but certainly JOLTS is the one the FOMC is going to watch heavily. That's going to be out on Wednesday. Factory orders Wednesday, not watched as much. Jobless claims on Thursday and non-farm payrolls Friday. Unemployment rate Friday. Consumer sentiment Friday. So I think Thursday you're going to see a lot of news around just jobs in general and jobless claims being a proxy for the unemployment rate, which has been creeping up. And then on Friday, you're going to get hit hard with non-farm payrolls, unemployment rate, and consumer sentiment. And consumer sentiment and non-farm payrolls paired together generally gives you the perspective of how everyone feels and is somewhat divorced from inflation. And I think that's going to be a recurring trend. And to close that theme up from earlier when I started on it, I think it's worthwhile to point out that jobs historically have grown while companies did well. I don't think this happens anymore. It's a serious talk time. I should probably go to the prompter for the sexier view. I don't think this happens anymore. And hear me out. This is theoretical, but still, I think, valuable. If companies are going to earn more money, but need less humans to do it, because AI and efficiency have improved, and efficiency is always watched by the market. If you're a publicly traded institution, there is increasing pressure to increase your earnings over time. And if there is a technology like AI that's out there, that's valuable, that will allow you to do that, then you have a fiduciary responsibility to your constituents, your shareholders, institutional and retail. You have an obligation to them to outperform and continue to build and grow upon this available technology. I know that's a terrible human thing to say, but it is a real meaningful situation that happens, and it's going to happen, whether you like it or not. And we're already seeing it. Earnings improve. At some point in time, earnings improving, they're not going to be putting as much money into capital expenditure as they had historically. They're going to be able to return some of that to the shareholder. These companies are going to continue to grow with less people. Historically speaking, in order to grow, you had to hire more people to be more efficient and to produce more product. And whether you were a service provider or you were a product provider, you still had to have more humans on the payroll. As companies grew, you always ask, how big is the company? How many employees are there? Well, guess what? That is not super relevant anymore because these companies don't necessarily need more people. They just need better efficiency from technology. Let's use the easiest example there is, call centers. How many call centers do you remember hearing that were in India because the cost of labor was cheaper? Now I think it seems like the Philippines are probably a little more prevalent. But you hear these call centers where you call and you know they are offshored. At some point in time, AI is going to get to the point where it's indistinguishable from a human and it's more responsive and reactive because it's got parameters built into it. It's got data fed into it. They don't have to, quote, look. There won't be some of the language issues there, for example. And because of this, you're going to get those entire call centers effectively shut down. It's going to be brought back domestically unless there's a reason for this to be cheaper overseas, cheaper energy, maybe real estate or something to that effect, but unlikely. So you wind up with unemployment rising, okay? And so jobs that are available will go down, okay? And if jobs go down, oh, interesting. There you go. Yeah, right there. If jobs go down, which is a weird thing for me, I'm looking at a screen which has myself on it. I have like a little monitor check mic thing over here. So I can't actually see this on that, but I can see it over here. It's really weird doing these. Don't ever do one. They're complex. Anyway, so jobs will go down, right? Just available jobs in the market will decrease, but profits will go up. Okay? I really got to get better at writing clearly on this. So this is the problem, okay? And as this happens, the companies have an obligation to improve here. That they just have an obligation to do this, all right? And this is the other way that the companies make money. Companies make money two real ways, okay? Increase your ability to make money, decrease your expenses. It's no different than what Dave Ramsey does on his side of things, right? Dave Ramsey focuses on expenses, right? That doesn't even look like the word expenses. Let's just clear that off. Dave Ramsey focuses on expenses. His claim to fame is that he can't teach you how to make more money, but he can certainly tell you how to lower your expense load, which gives you more net profit. Okay? A lot of people online selling courses focus on, let's make you more money because you can't control for the expenses. Matter of fact, they oftentimes want you to have bigger expenses because you need more money, which means you're hooked in psychologically to their infrastructure. So companies are no different than this. We all operate with the same idea of an income statement and a balance sheet. And companies manage theirs down because they have to report it to the market quarterly. They have earnings calls. They talk about these things. And all this information is publicly available. And they're all held to the same standards. They have SOX controls in place, Sarbanes-Oxley. They have FASB rules they have to apply, the same tax rules. It's supposed to be a uniform playing field. Whereas you and I don't have that same responsibilities other than the fact that we pay taxes effectively the same way. And the way I use the word same way loosely. So you wind up in an environment where you're going to see jobs that are available to the market decrease. It's going to be harder and harder to get into companies. More companies are going to continue to lay off over time or just hire less, yet their earnings will improve. And I think this is a decoupling of the Fed's dual mandate long term. We're looking at things with outdated data and outdated resources. Like, for example, the housing numbers are 6 months behind the lagging indicators. But this stuff's available in real time. You can just go look at any MLS across the country and find this stuff real time. Why we have not improved this aging infrastructure is beyond me. But you wind up in a situation where the Fed's mandate, stable employment, stable prices, and I'm paraphrasing, they don't align anymore. And because they don't align anymore, you're going to see one big problem happen with GDP. If people are making less money, then 70% of GDP is propped up by consumer spending. If you don't have GDP supported by consumer spending, and GDP is propped up by corporate spendings, you're going to see GDP's dynamic change over time, but the economy isn't going to look good, but the markets are going to be booming. And that will be the problem that really raises red flags, because that is here. It's not coming, it's here. And the other dynamic that you have, which is interesting, is you've seen all this conversation as of late for UBI, Universal Basic Income. And the reason why that's appealing is because this comes down the pipe. Elon Musk said it best, if you have robots that are working with AI that are outperforming humans, how are humans going to make money? The bigger question I have at that point in time is, again, I keep slouching, so you see like my chin on the little bar here. I gotta Stop doing that. Better. The bigger question I have is what happens when everybody makes the same amount of money? And I don't mean everybody, there's always going to be outliers, but when the majority of Americans have the same UBI, same universal basic income, what happens then? What happens to capitalism? I don't know. Camera quality is good, huh? You like? Thanks, Persia. Appreciate you. All right, everybody. I'm going to call it a wrap for today. I know we typically go about 2 hours, but we're still trying to figure things out and improve the stream. If there are suggestions you have, I appreciate all the emails. You can get us at media at higherstandardpodcast.com. Shoot me an email. You can also leave it in the comments section on any of the platforms. This is streaming on LinkedIn, YouTube, X, Instagram, and TikTok. So by all means, feel free to drop messages there. I am going to start posting these into those platforms permanently so they don't disappear like they used to anymore. And if you have anything that you'd like to see us cover, please do. As Saeed ultimately joins me on this at some point in time, we'll figure out the logistics of that and how it works. I'll be able to do more interesting things, and we'll have a little more engaging culture. I'm also working with a bit of a handcuff situation here where a lot of the things that I would normally share with you require video and audio. And I'm updating the equipment today to get that situation finally resolved. And I promise this will continue to grow and be more engaging at that point in time. Thank you all for watching, and thank you all for staying connected. And if you do happen to want to support the show, the best way is right there. Go to Join Fridays. Let them know we sent you over. We appreciate you. Thank you for tuning in. I'm going to send you out. Last time I did this, mixed results. So wish me luck, everybody. See you next time.